Something weird happens on Fridays in the financial markets. There's this strategy floating around everywhere. On TikTok, Telegram, and YouTube channels, it's called Friday Fade, or Friday Flush, or Friday Flip. Whatever the name, the idea is always the same. On Friday afternoons, the market goes wild, and you take the opposite side. When everyone's closing their positions, you're opening yours. Some say it always works. Some built bots for it. Some say they're making money off it. But today, I want to do something different. We're going to build it from scratch using AlgoBuilderX and find out if this Friday legend is real or just another trading group fairy tale. Let's jump into the AlgoBuilderX builder and start creating the strategy. First block we need to drop in is check trade count. This block helps us manage trades that are already running on the cbot. We want the strategy to only have one active trade at a time, so we'll set it to no trade. Now let's add the weekdays filter block and select Friday as the only trading day. Once it's checked, the block will activate only on Fridays. Then we add the time filter block and check the time range option to define the time window when the strategy is active. In our case, we'll set it from 1 p.m. to 7 p.m., more than enough to catch the afternoon volatility. Finally, we add a spread filter block to avoid entering the market when the spread is too high. I'd say anything below 2 pips is more than enough. Spikes can happen, especially if there's news or unexpected events on a Friday. Now let's move on to the core of the strategy, the entry conditions. We'll use 2 indicators, RSI and SMA. To build the buy flow, we start by adding a condition block. On one side, we select candle close, 0, and on the other side, simple moving average 20. The condition is, candle close is less than the SMA. Then we set the second condition block and set the RSI less than 30. And we connect the blocks together. Once the buy flow is done, we duplicate both condition blocks to create the sell flow. In the first block, we change the condition to candle close, 0, is greater than the SMA. And in the second block, we set RSI greater than 60. And we connect the blocks together. Now it's time to add an extra filter to improve trade quality. We're going to insert a custom candle pattern block into the flow. In the buy flow, we want a red candle, a bearish candle, right before the entry. So we set the candle ID to 1 and check that the candle's close is lower than its open. In the sell flow, we want a green candle, meaning a bullish one. Again, we use candle ID 1, but this time we check that the close is higher than the open. Now we've reached the final step, executing the trades. We'll add 4 execute trade blocks, 2 for buy and 2 for sell. Why 4 blocks? Because we want to separate premium signals from regular ones based on the output of the custom candle pattern block. If the output is true, meaning the pattern is detected, we'll trade with a larger lot size. It's a higher confidence signal. If the output is false, we'll still enter the trade, but with lower volume. Connect the pattern block's true output to the buy premium and sell premium blocks. Connect the false output to the regular buy and regular sell blocks. Now let's configure the execute trade blocks. Since this is a test setup for a sample strategy, we'll keep things simple and clean. For the premium blocks, the ones connected to the true output of the candle pattern, we'll set the lot size to 0.02. For the regular blocks, coming from the false output, we'll set the lot size to 0.01. We apply this setup to both buy and sell blocks. Now we'll add both stop loss and take profit values. To keep it consistent, we'll set both to 40 pips. This applies to all 4 execution blocks. Let's not overcomplicate things with a ton of parameters, at least for now. 40 pips is more than enough to validate the idea. Final step before moving to the backtest. We're going to add a martingale logic. Since this strategy runs only once a week, we want to maximize every opportunity, even the losing ones. We'll set up 2 separate martingales, one for premium trades, one for regular trades. This allows us to manage them independently, using different groups and multipliers. Let's configure the buy blocks. In the buy premium block, we enable martingale, set the multiplier to 1.8, and use group ID equals 0. In the regular buy block, we also enable martingale, but set the multiplier to 1.5 and group ID equals 1. We apply the same logic to the cell blocks. Cell premium, multiplier 1.8, group ID 0. Regular cell, multiplier 1.5, group ID 1. Alright, the strategy is ready. And now comes the most exciting part, the backtest. Using the View Real-Time Source Code feature, we copy the code generated by AlgoBuilders and paste it straight into cTrader. While we watch the backtest run inside cTrader, let's take a moment to reflect. Our goal today was simple: to figure out if this Friday strategy is solid or just another internet myth. We built an example from scratch, and that's the point. Every strategy you see online should be a starting idea, not a guaranteed truth. Even if the backtest looks good, that doesn't mean you should jump into live trading. You need time, testing, and a serious approach. What we've shown here is how AlgoBuilderX lets you build real strategies, even without knowing how to code. Visit AlgoBuilderX.com to start building and automating your own trading systems. Completely free to try. The backtest closed with plus 6%, using small lots on a 10K account. As a test, it's interesting, but as it is, it's not ready for live trading. It can be a solid base to build your own system. Friday isn't a myth, but it takes research, time, and real work. As part of a weekly diversification strategy, it could really make sense. Download it from AlgoBuilderX and keep experimenting. See you in the next one.